Hey everyone, Brian Bogner and Greg Towner here with Parallel Portfolios, and it's time for our 5-minute market update here for the month of May. So why don't we go ahead and get started? Take it away, Greg.
All right, well, great. We always like to start off with the trends of the market, and this is a 3-year chart of the S&P 500. We can see that we had a nice long sustained uptrend, and just here in the last few months we've had that consolidation period. It's come down and retested the 200-day moving average on 3 different occasions, held nicely in that general area, and now we've been moving higher. Haven't broken out to a new high, so we can't say that the consolidation period is completely over yet, but so far good signs of showing support held.
Well, Greg, you're talking about the S&P. Are there some other areas of the market that are showing leadership here and doing really well?
There are actually a couple we want to highlight today. First, this is the small cap index. So again, similar to the large cap, it came down to the 200-day moving average a couple of times this year, but the third time it didn't even get all the way down there. It's showing that it didn't want to sell off much, and now it's actually moved up to, as of this morning, to new highs. So small caps have been strong for a variety of reasons. And historically, when small caps are doing well, that's a good sign for the market overall. I mean, rarely do you go into a bear market when small caps are outperforming. So that's a positive for us.
And when you say small caps, just for all of our listeners here, you're meaning small companies, smaller.
Yeah, exactly. Thanks. Yeah, smaller companies in size, they tend to be more U.S. based, not have as much international, and just a smaller size of company. Exactly.
Good deal.
We've talked, last meeting we talked about commodities as a whole. So we thought we'd drill down a little bit further this time and show one of the key areas of strength within commodities, and that is energy, oil. It's been really strong here this year, actually going back to last year. It's an area we've been trying to gain exposure to over the last several months. There's, again, a variety of reasons that oil is moving higher. But usually when commodities are moving higher, that means inflation is moving up a little bit. And modest inflation actually historically tends to be quite good for the market. It's when you have that runaway inflation that you have a problem. But we're not seeing that right now. But certainly energy and oil specifically, another area of strength.
So you're obviously bullish on stocks and on energy as well. But can you share a reason why you're bullish?
Yeah, absolutely. So what we've shown so far is kind of the price action, the technical reasons, but of course there's always fundamental reasons behind that. One of the things we've talked about probably as much as anything on these videos, Brian, is earnings. That continues to be the case. This year, as we came into the first quarter, there was really high expectations for earnings because of the reduction in the corporate tax cut and some other reasons. And earnings have surpassed that to the extent that analysts are actually having to revise their estimates higher by much more than average, despite coming in with high expectations. So, certainly they can't sustain the type of growth that we saw in this first quarter, but we like the fact that they're beating expectations even with those high numbers.
Well, even though we're bullish and earnings are coming in, the market has really been quite volatile this year. A lot of ups and downs. Can you talk a little bit about that?
Yeah, we thought this next chart was a good one just to remind everybody that what happened last year. And if we look at the little column for 2017, so these bars show the number of 1% moves through mid-May in each of these years. And last year was just so quiet that it's easy to kind of get used to that and think that that's the normal, when in reality, more of what we're seeing so far this year is really the normal. I mean, the stocks, they go up and they go down. That's really the way things work with them. And last year was quite abnormal. So we just wanted to remind everybody that what you're seeing right now is nothing too unusual and nothing to be overly concerned about as long as we continue to have our risk management plan in place like we do.
So in summary, stocks are still positive. Long-term trends are there. Small caps are leading. Oil, making new highs here. Oil's leading as well. And really the earnings story is a reason why we are so bullish, and not to let, even though, year to date, I mean, it is May, and, that we've experienced volatility and we've experienced some ups and downs. This is actually normal. And what we experienced last year was really out of normal, and so this is okay. We shouldn't be alarmed or anything like that. Does that sound about right?
Yeah, that's a great summary. Absolutely.
All right. Well, good. Well, thanks, Greg, so much for your commentary and analysis. Here's Greg's contact information. If you have any further questions or would like to connect with him about anything. And thanks so much for listening. Have a great day.